Sean, the property tax accountant. Welcome back to the Property Nomads Podcast. For those of you that are listening to it already, go and check out episode 232. That is the 6 top tax tips. Sean goes in depth on a number of different things to do with tax, basically. So well worth a listen to. For those that have already listened to that, Sean, the property tax accountant, is back. But today is a lot more conversational. We are going to be chatting about the 8 tips for remote property investing. As mentioned last time, Sean splits his time between a multitude of locations. Now, for those of you that know myself, with partner being Mexican, in due course, I will be splitting my time around the world as well. That doesn't mean that you're not able to do property investing. Absolutely not. We're here to dispel a few things in this episode, so it's going to be a lot more conversational. All of that being said, Sean, welcome back to the Property Nomads Podcast.
Thanks, Rob. It's great to be back.
We've been speaking off air. We sort of worked out 8 tips, and we can both draw on our experiences, which is the whole point of this episode. So do not go into this with a mindset of, well, if I don't live in my investment area, I can't do property. Absolute nonsense, BS. You can. There is always a way in which to get something done. So, Sean, we'll start off with number 1. That seems the most logical place to start. Choose the right strategy. How is that going to help remote property investing?
Well, I mean, let's get started. So these are obviously all personal opinions now, and really from my own experience, might not be right for everybody else. But for number 1 for me is really choose the right strategy for your individual circumstances. So, how do you choose the right strategy? So I would be asking myself, so how much time can I spend in the local area? So where you actually invest in that property. Are you going to be there for purchases and sales? How much time abroad are you going to be and to manage day-to-day issues, for example? So are you just going to be away for a few months? Great, probably not an issue. But if you're away for 9-10 months of the year, obviously it's going to be very different. What's taken you abroad? How much time are you going to have available? Will you be able to, for example, make the time differences work? So let's take the East Coast of the US as an example. The time difference is only 5 hours. That's probably doable to stay in contact with people back at home. But if you're in Australia, do you want to be getting up in the middle of the night on a regular basis to be able to speak to all of your key contacts in the UK? I suspect the answer is probably no. And then another one is in terms of yourself, are you willing and able to be able to hand over the reins to others? Do you have that trust in those people to be able to do that? And do you have the budget to support it? So that would be what I would be asking myself before I even thought about property strategies entirely. What are your thoughts on that, Rob?
I completely agree. And this is the sort of the premise of this list, isn't it? Is we agree on all of it. So I will be saying I agree quite a lot. In terms of choosing the right property strategy, yes, it's paramount. What are you getting into property for? Is it to have the cash flow? Is it to see your property prices increase? Obviously, inflation is going to help do that anyway over a long period of time. But for myself, and my partner's Mexican, I like Mexico. She quite likes the UK. So, I don't want to stay here for the rest of my life. I want to be sort of moving around. Time difference is very important for example, the Yucatan. I think it's 6 hours most of the time. So again, manageable, not an issue if I've got to get up a little bit earlier, because you're then catching people at lunchtime or just after. But for us, Aaron and myself, when we cracked on with property, we wanted to create that lifestyle. Not, we're traveling people. We're not after the opulence as such. To have the time to be able to do things is important. To have the choice to be able to do something is very important. So for us, it's, going on these sort of wacky adventures and attending sporting events. We'll probably end up at the World Cup in Qatar at the end of the year, maybe the Rugby World Cup in France, although admittedly that's not too far to go, 2023, maybe go and watch some test cricket in the West Indies, all random bits and pieces like that. So for us, it was about cash flow. Can we get the cash flow? Are we happy to put time in to get the systems and whatnot set up properly? And then if we've got the right people in place, etc., which we'll touch upon in later tips, that's what it is for us. So the right strategy is fundamental.
Absolutely, yeah, completely agree. So if I then think about just certain strategies, certainly not all. I mean, if I think about buy to let, if you can get high quality long-term tenants in, for me, that's the best. That it really is. If I then think, to some more complex strategies, if you will, is things like HMOs. Yeah, I wouldn't touch this personally, but others certainly would. Obviously, a lot of people go into HMOs because of the higher returns, generally speaking. But often those returns are because those investors are actually then managing those properties themselves. And HMOs, just by their very nature, are very labor intensive. So if you're then fully outsourcing that management service because you're simply not in the country, then that's going to erode those great margins and may make it more trouble than it's worth, and perhaps lower returns than, say, just a standard buy to let. But each individual circumstances are different. Yes, similarly, if we think about serviced accommodation and Airbnbs, again, lots of people do that. It may well work. It can be a completely hands-off investment if you've got a great management company. If you've got, they're perhaps managing the cleaning team as well. And it's, could be very, very profitable, particularly if you've got great occupancy rates, for example. But again, a lot of people perhaps may get into this, through rent to serviced accommodation. And the chances are they're probably going to be doing a lot of that work and looking after those properties themselves. So, clearly that's not going to work if you're abroad a lot, unless perhaps, let's say you're managing a property or properties that are very busy in the UK in the summer, but then you can get away in the winter, perhaps when those properties, are effectively vacant. So, there's certainly plenty of options there. And then if I think about BRR, or then even moving on to flips, for me, this would be the most challenging. I mean, I know that there's various people that do flips from 200 miles away, and, they've got a great team and can periodically, they're normally in the south and they can pop up north to check on properties, and, might do video calls to check on the status of work and assessing the quality and things like that. But again, if you're out of the country for a significant portion of the time, then it's definitely going to be challenging, but it's doable. I mean, you could get into a lovely situation whereby perhaps you spend the summer in the UK doing flips, and then you disappear for those cold, miserable winter months, maybe.
Too true. And just to highlight what you said at the start of the episode, which is paramount, these are based on, our opinions. Nothing is impossible. Absolutely nothing is impossible here. Where there's a will, there's a way. But we'll go back to the main point. Choose the right strategy. So, what are you in it for? What's your lifestyle design? What are you thinking? And work from there. You mentioned on it briefly there, Sean. Moving on to point number 2, use a budget. From your experiences, why is that an important tip for remote property investing?
I would say because the expenses are likely to be higher. And there's several reasons for this. The most obvious one is the fact that you're going to be outsourcing certain services. So whether you're using a fully outsourced letting agent, or there's work that you could perhaps do yourself, particularly if you're pretty handy around the place, repairs and maintenance, you're not going to have to pay tradespeople for, particularly if you are, a tradesperson by trade anyway. Then there's some, less obvious things. So if you're out of the country for a significant portion of the year, you may become non-resident for tax purposes. If you're then non-resident for tax purposes, well, guess what? The government have fairly recently introduced a further surcharge on stamp duty. So not only are you going to be paying the 3% for additional properties, for second properties and more, but then there's an additional 2% for non-residents, which suddenly starts, those stamp duty bills suddenly start mounting up. I mean, I'll pause there just in case you wanted to make a comment, but I do have another one tax related, which is quite comical actually, but let's not move on too fast.
No, well, we'll definitely touch on it. I was just thinking, so just personal circumstance. So hypothetically, let's just say I go and stay for 2 years in Mexico, but hypothetically, but my business partner is UK resident. That's not going to change. Business is based in the UK. Would that surcharge still apply if one of the directors was a non-domicile?
Quite possibly. I would need to look into the exact rules for that. But what the revenue does do is effectively looks through those companies and looks to the ultimate beneficial owners. I suspect if you were non-tax resident, that you may well be. So it's no different to say, I don't know, let's say a husband and wife team that buys a second property. One of them may never have owned properties before, but the other one has done, and that would trigger the 3%. So it probably would, but don't hold me to that.
Fair play. And in terms of using the budget, as I've written about in various books, and Aaron will say the same thing as well, what we like to do is put 10% of the gross rental income per property or for the whole portfolio, which both the same. We'll normally put that into a savings account, or what we call our MO account, monthly operating expenses account. That way, if something pops up, as it inevitably will do in property, that way you're not fretting about it. You're not trying to run around trying to scramble some cash together. You've got it in your account. You've already budgeted for it. You've allocated those funds, rainy day funds, call it what you will. That being said, this story you were talking about, this antidote.
Yeah, so I've probably built it up too much now. So non-tax residents. So this is an interesting one. So if you are renting out a property and you're a non-tax resident, you have to file form NRL1 with HMRC. And so that says to HMRC is, hey, I'm abroad, but I'm renting out a property. I'm in receipt of rental income. You need to do that for every property. And if you don't file that form, then what it means is that whoever you're receiving the rent from has to withhold 20% of that rent. So that works really, I can see your face already. I know where your mind's going now. That works fine if say, for example, you're using a letting agent that's collecting the rent on your behalf. And so, the tenant would pay the letting agent £1,000, and then the letting agent would then withhold £200, 20% as tax, and then pay that on to HMRC. So you'd receive the balance. Now, the question then becomes well, what if you're not using a letting agent and you're just receiving the rent directly from your tenant? Well, the way in which the rules are put together is that the tenant would have to withhold that 20% and then pay that across to HMRC each month. I've never ever come across that, and I'm yet to hear of that actually working in practice. I can't imagine any tenant moving into a property saying, "Oh right, well you haven't given me an NRL1, therefore I'm going to withhold some of the rent and pay that to HMRC."
If anyone's listening and that's ever happened to you, let us know, because that is priceless. If that's the case. Talking of MO accounts and putting a reserve aside, that leads us on quite nicely to point number 3, dealing with funding challenges. Now, are we looking at this from a mortgage point of view, or did you have something else in mind when you thought of this particular tip?
Yeah, very much a mortgage. So again, I'm putting my non-resident non-tax resident hat on here. So if you become non-resident, then you're effectively treated as an expatriate, an expat. And lenders typically will see those individuals as higher risk. So the reason for that is that they recognize that it's going to be much more difficult to pursue those individuals if the debt goes unpaid. They're also very, very worried about money laundering. So particularly for those, maybe the smaller lenders or those with, very automated systems, it's going to be one of those computer says no moments. The mortgage lender is that there'll be fewer lenders in the market. It's as simple as that. And then because it then means that those lenders that remain in the market, they have to jump through many more hoops. So, for example, they may, they're going to have to somehow validate your income, for example. If you work for a global company, then that's easier because they can go down to the local office and correspond that way. But if you're working for a local company in Singapore, wherever it might be, Mexico in your case, it's going to be a lot more difficult. But the fact that they're having to jump through so many more hoops, they're going to want to be compensated for that extra time and energy. So again, higher rates. So fewer mortgages, less competitive because the market's smaller, and therefore high rates as well because of the risk. So again, that's something to work through. What's my tip here? And I said this on the prior episode, speak to your team of trusted advisors, speak to your mortgage lender straight away. If you're thinking about going abroad, or if you're thinking about spending more time abroad, talk to the broker.
Yeah, and this is something I've started doing, because again, it comes down to what you echoed in the prior episode and here already is, number one, being honest, but number two, planning ahead. And it is one of those very practical things. We've had, not to dive into it too much, but a lot of practical useful advice has come back from initial conversations about how to potentially, and perfectly legally, I will point out, be out of the country for quite a significant amount of time, but also then have the necessary things in place in order to possibly offset that. Now, those things are changing all the time, so I'm not going to sort of sit here and dive into that. Maybe when it happens, I'll do an episode, but that's maybe a few years down the line. But there are certain things you can do that mean that you're out of the country for a period of time and you're still treated as a UK tax resident. But by the by, dealing with funding challenges, very poignant. Again, not impossible to get funding if you're, I don't know, for example, a South African and you're looking to invest in the UK. Entirely plausible, but as you've quite rightly said, there might be a few challenges here, but also go back to point number two, factor it into your budget as well. Number four, the importance of surveys and snagging. I think snagging is, well, it's pretty much like Ron Seal does exactly what it says in the tin. You must have a look at your snagging if some work's been done, get a little thing sorted ASAP. But in terms of surveys, why, in your opinion, is getting the various surveys important if you're looking to invest remotely?
So for me, these are worth their weight in gold. So if I'm purchasing a property from abroad, it might be the case that I've only looked at it on Rightmove. So I'm not visited it myself. I'm an accountant, not a construction engineer or anything like that. Even if I did look at it myself, I might have had friends or family members view the property, but again, are they going to catch everything? So a survey for me is worth its weight in gold. You're probably looking at probably around about $1,000 for a 3-bed detached house, perhaps, where the surveyor might spend several hours inspecting the property from top to bottom. I'm talking about here is the full comprehensive building survey rather than just the drive-by ones for mortgage valuations. I would be recommending one of these surveys, even if you're a cash buyer, where you're not required to have a survey at all. For me, I get a really detailed survey report back with lots of photographs and descriptions of all the potential risks and where the house might be wearing out. So what that allows me to do is, number one, it allows me to determine whether I'm even going to buy that property or not. I've had an offer accepted, but it's always subject to survey. So if something is significant that's identified, I can either pull out of the sale or renegotiate the price because work needs to be done, or ask the seller to do the work before completion. The other one as well, it allows me to plan and budget. We've talked about budgets. It allows me to plan and budget for the next 5 to 10 years. So yeah, the roof is fine for now, but we can see that it's going to need to be replaced or whatever it might be. That allows me to do that and gives me that sense of security.
Makes perfect sense. And again, it's worth its weight in gold. It's well worth the investment, especially if you haven't got people on the ground straight away, or not people that you could necessarily sort of trust and rely on straight away if you're looking to get started. I would say from experience that also being a qualified domestic energy assessor, i.e. I do EPCs, that's always a good way to be a bit nosy. I'm not saying that I'm by far, a building guru, definitely not. But certainly the knowledge I picked up from that, I can certainly apply if I'm having a browse around a home as well. What's the build type? Is it solid brick? Is it cavity? How can you distinguish the difference? Is it timber frame? System build? All of that sort of stuff. Definitely get your surveys. It could save you a hell of a lot of cash, especially if something pops up like I don't know, what's the word I'm looking for? Is it subsidence? I get confused between subsidence and subsistence. It's subsidence, isn't it?
It is, yeah. The other one relates to your daily newspaper and food.
Tally ho. So yeah, that is me getting a bit confused. So yes, definitely, if you have the ability and the option to get a survey, again, treat it as an investment. It's well worth its weight in gold. Talking of things that are well worth their weight in gold, number 5, appoint a great lettings agent.
For me, this is absolutely key. So, for me, I'm a very hands-off investor. So I go down the fully managed route as opposed to let only. And finding a good letting agent is, number one, it's difficult. But when you find a good one, work with them because they can help enormously. So the advice that I was originally given, back in the day, was go with an estate agent that is also go with an agent that does lettings only. So, theoretically, a bit like, we talked about on the prior episode about, use a property tax accountant as opposed to a generalist accountant. But, the letting agent is, that's what their main job is. If they're doing sales also, then they're not necessarily going to be focused on your property that you're letting as much as perhaps they could, because perhaps the margins are lower for them, particularly when property markets are booming as they are at the moment. Ultimately, I went with a family friend's first-hand recommendation. Said, hey, these guys are great, give them a call. I spoke to many, but ultimately I found this one. And then once the letting agent got to know how I and my wife work together, we understood how they work. The service has just been phenomenal since day one. Cannot emphasize that enough.
And we were given the same advice as well when we started. When you're looking for a lettings agent, if you want to be hands off like we like to be as well, it's the same advice. Go with one that just specialises in lettings and not sales. And we've gone through a period where we trialed a few, and we've now got a more concentrated amount of lettings agents. The reason for that is we've got 3 different places where we've got properties: South Yorkshire, Hull. Sorry, makes it sound like I think Hull's in South Yorkshire. My geography is better than that. So South Yorkshire, then Hull, also Burnley as well. And especially for the one in South Yorkshire and Burnley, when we were buying, etc., it's one of the first questions we asked is, which recommendation would you give for a lettings agent? And those properties are like clockwork. They're absolutely fantastic. There's nothing wrong if you want to self-manage your portfolio, nothing wrong with that. However, that detracts away from the episode itself. 8 tips for remote property investing. So Sean, totally with you. Number 5 there, appoint a great lettings agent. Moving on to number 6, have a trusted person on the ground. In what way do you mean have a trusted person on the ground? What sort of jobs are you looking for this person to do, and who should that trusted person be?
Yes. So, well, it could be a good friend. It could be a family member. Ideally, they would have a few property related skills, but I don't think that's essential, particularly if you have a good letting agent. You can't put, in my case, so I feel that I can't put everything in the hands of the letting agent. There's still times when I need additional assistance, and I particularly need that additional assistance when I'm abroad, but purchasing or selling a property. So, for example, I use my in-laws, which are great because we invest in their local area. And so what they'll do, if my wife and I spot a house that we might like to invest in, they can go off and do a viewing, discount certain properties for us, maybe take some videos, those types of things. But then when it comes to the exchange of contracts, and this is the tip really, is we have set them up as our powers of attorney. So they can now sign contracts on our behalf. Now, it also means that they can access our bank accounts and all sorts if they so wish. So trust is the key word here. We know that they're not going to do anything on our behalf. They're not going to instruct a sale or anything like that, empty our bank accounts. But to have somebody on hand that can do that wet signature is brilliant. I'm not quite sure why the legal profession hasn't quite moved to digital or electronic signatures yet, as many accounting firms have. But this helps enormously at the time of exchange, and then finally at completion, they can also be around to do the key handover. Now, again, your letting agent can do that for you, but you do get that warm and fuzzy feeling knowing that you've got a copy of the keys as well, and that it's all been done.
Going back to that point there about power of attorney, and again, it's something I've thought about but haven't had to enact. Still at the time of recording, still here, still in the UK. If a mortgage company needs a wet signature, do they accept that power of attorney? Can you tell us a bit more about the experiences you've had and how easy you found that to be?
I can't actually, Rob, on that particular aspect, as we haven't used mortgages on our portfolio.
Okay, fair enough. But from a legal point of view, there's not been issue when you're, say, for example, signing title deeds. That's not been an issue.
Absolutely none. That's the particular point that we use it for. So what we did many years ago now is we provided, we still did effectively the KYC, the know your client checks in the offices of our conveyancer. So here's me, here's my passport type thing. Here's also my signature. But we only had to do that once. So we haven't had to do that for the subsequent properties that we've purchased. But we work with them to say, look, this is our position. This is the power of attorney document that matches our signatures. Through email correspondence, telephone calls, we say, look, this is what we want to do to get the solicitors comfortable with what we want to do. And then, it's perfectly legal to do it like that. And indeed, for title forms and things like that, it clearly says, look, this is being signed on behalf of, Sean, the property tax accountant, and his wife, and it's signed by Sean's in-laws. It works so well.
Fantastic. I have made a mental note and I will type a note of that as well. Absolute genius. Thank you for that. So I like that. In terms of having a trusted person on the ground, yeah, again, you might, in your case, you found that's the in-laws. You might find that if you're new to an area of investing, you might find that might take a few years to build up that proper trust so that person knows what you're after, etc., etc. On to number 7 then, making the most of technology. Now, we've seen a lot of technological advances, certainly in our lifetimes. I mean, here we're going to be looking at things, for example, Skype, Zoom, things like WhatsApp, your social medias and whatnot. It's a lot easier now to, even to be able to just send, a video to one another, via those many channels. I think that's the point of having this point, that just because you're physically not in said area, it doesn't mean you're not able to see what's going on.
Absolutely. This is probably the one thing that I'm actually thankful for as a result of the pandemic, which sounds slightly perverse to say, but the likes of things like video technology and whatnot have really come on leaps and bounds over the last 2 years. I mean, the last decade has been absolutely wonderful for connectivity and technology, particularly with the likes of fintech and all of those things. But there's this technology that you use as an individual, and then there's technologies that you use then to collaborate with others. And so I think, for the technology that when collaborating with others, we'll come on to when considering the next tip. But if this tip is really just focused on technology that you use yourself. And for this one, I recommend using a proper app or accounting software that is very much designed for property investors. So the one that I like to use as a landlord is Hammock. Use hammock.com, and it's a wonderful app. It really, really is. It does multiple things. The tagline that they use is designed by landlords for landlords, and so it does both financial management systems, but also general management systems. So just talking about the general ones, if you are self-managing, it will provide you with reminders for lease renewals, for gas and electric safety inspections. It's a place to store your leases. It's a case to store all of your certificates rather than just in random folders on your Google or OneDrive account. So it's great from that perspective. But then the financial perspective is also wonderful because it connects directly to your bank using open banking. It can read-only access, so I would add as well. It can't suddenly create payments or anything like that. It can track the profitability of each individual property. So all you do is when those transactions start coming through, you can assign them to each property. It then learns using AI. It then learns what types of expenses apply to which properties or which category of expenses. And so, you can see which property is doing better than others. That might, result in you either, increasing rent or selling a property perhaps. And then the other one is because it's tracking rental payments and various other payments, it will actually flag to the user if either a rent payment is late or has not been received. So I said on the last episode is if I've seen real cases here where clients would say 10, 20 properties. It's difficult to manage. That's a lot of transactions, a lot of data. And Hammock have actually said, oh, by the way, do you realize that the June rent for property, number 5 on the high street, it didn't pay, it missed a rent's payment. And, that could have just been through user error on both sides in the case of a tenant, but it then allowed the landlord to go and chase that payment and then receive it. They wouldn't have ever chased it if it wasn't for that reminder. So it is doing that matching. It's wonderful. And then, you could take that a step further and then get a proper accounting system as well. It does many of those things from the finance perspective as well, such as, the likes of QuickBooks Online.
I agree, and I would also say that for people thinking, well, I'm not really too good with technology, or I don't want to use that app or anything like that. For Aaron and myself, actually, we're a bit old school. We use Zero and Excel. We find that through trial and error of different apps and the way that we like to take care of things. I think what Aaron does, he'll sit down once a week for an hour or so, go through various bits of banking and whatnot. He'll plot that on a spreadsheet, and then our admin man can take care of the rest of that on a couple of other spreadsheets. That's what we found works for us. Of course, many people, the idea of spreadsheet would give them a headache or possibly a migraine, and they'd rather using that. But even Excel, that's something that wasn't around 30, 40, 50 years ago. So it is using technology to its potential. We'll go on to the last one then, Sean, which again is key. You touched on it on the previous episode there, something we agree with definitely, and it's imperative. Selecting the right advisors. So basically a power team, making sure you're selecting the best possible power team, that they understand your requirements and what you expect, but also what you expect of them. So in effect, it's a two-way street. Do you get on? Are they best suited for you? Are you best suited for them? Anything else to add on that?
Yeah, absolutely. I mean, I think when considering advisors, I think this boils down to technology, trust, and an attitude that those advisors and parties can provide to you. So if I think about technology, we've just touched on that, and you've mentioned things like Zoom and Teams, FaceTime, WhatsApp, whatever it might be. I have found as a result of the pandemic, not only has that technology improved, but also clients actually prefer to use that technology now, in many cases, rather than meeting in person. Don't get me wrong, it's great to meet in person, but we are all busy, and typically with property investors, this isn't the sole and single thing that they do. They've typically got a 9 to 5 as well that they're trying to escape from in many ways. So the last thing they want is to be stuck in traffic, and to meet somebody in person when you could have that 15-minute video call instead to discuss a specific matter. And then, we've talked about Hammock and also the likes of QuickBooks Online, which is the cloud accounting system. And again, these are just great. I won't labor the point, but because everything is digital, there's no need to be using snail mail or meeting in person to be able to hand over boxes, or you have receipts and bank statements. All of those things, it's painful. You can snap pictures of your receipts on your phone, and it will just upload it straight up to the accounting system. It just makes life so much easier. And then moving on, again, we touched on this earlier, is the accounting industry has moved on to digital and electronics signatures. So you can get, important letters or contracts signed within seconds. Again, no snail mail. And then, the requirements for this sort of technology are increasing as well. So we have Making Tax Digital that's coming down the line in a couple of years' time. And so all landlords that have income over 10 grand are going to have to start using some form of digital system as well. So the likes of QuickBooks Online and Hammock is already set up for these things. Clients also want like online portals to be able to see their own documents, their accounts, their tax returns. And again, they're the types of things that I use. But just to conclude on the technology point here is what we're seeing is this shift, certainly within the accounting industry, is that those accountants or accounting firms that are perhaps coming up to retirement, they're seeing the likes of Making Tax Digital and saying, you know what, I prefer snail mail, I prefer printing things out, I prefer Excel, whatever it might be. I'm not going to change all my systems because I'm retiring in 3 years' time or whatever it might be. I'm calling it a day now. And that's happening at the same time as clients are also changing their demands. So I find this topic of technology fascinating. I really, really do.
That's probably something we should touch upon in again a future episode in terms of digitalizing property. I think that will resonate with a lot of people. But just to summarize this particular episode, so 8 tips for remote property investing. Number 1, choose the right strategy. So again, lifestyle design. Are you going to be flipping, service accommodation, buy to let? How does that work? What do you need from that? Number 2, use a budget, which ties in with number 3, dealing with funding challenges. So again, if you're an expat, you're investing from abroad, you might need to account for an increase in cost, for example. Number 4, the importance of surveys and snagging. It's important to get surveys done because it could highlight something that you might not be aware of when you're purchasing a property, especially if you're not on the doorstep of said property. Number 5, arguably the most important one, if you're not managing property yourself, appoint a great lettings agent. Again, the advice there is ideally use a lettings agent that specialises in lettings only, not one that does sales as well. And I found normally the smaller the lettings agent, the better, actually, because they're more attentive. Number 6, have a trusted person on the ground. So Sean, as you've quite rightly said, you've got your in-laws on the ground that have power of attorney to be able to sign title deeds, bits and pieces like that. Also someone that might be able to do, drive-by inspections, someone that, an extra set of hands as and when you need them. Number 7, make use of technology. So in our case, Excel, Xero, etc. Also with Hammock, QuickBooks, digitalizing your business, very important nowadays. And finally, select the right advisors, take time to speak to people. Your power team's imperative at the end of the day. I think there's some great information there, very practical as well. You don't have to invest on your doorstep. You can invest miles and miles up the road, or as you do, Sean, you can invest when you're not even in the country, if you're out and about on your travels. Likewise with myself and Aaron as well. We could be out on our travels and the business is still working in the background. Any other business before we shut the episode down? Any other key tips that you think people need to know?
I think it's all about trust. If your power team, I really, really do. If they're responsive, they know how you work. You tell them how you want to work, and if they can, you're in a brilliant position.
Fantastic stuff. And for those people that want to connect with Sean, the links are in the show notes. So go back to episode 232, as well as 6 top tax tips. Sean, again, a massive thank you for your time, and look forward to more episodes in the future.
An absolute pleasure. Thank you very much for having me.